Hello, everyone. Welcome back to the RationalInvestor.com's weekend frivolity. This is our Broiler Chicken Show. Kind of a funny name for a show. But harken back to my old commodity broker days. Broiler Chicken Show. Looks like we got YouTube working, so that's encouraging. But put that on mute in the background. So many buttons on these silly screens you have to keep track of. So, good morning, everyone. Happy 2020. I guess this is the solstice, so we're just about exactly halfway through. Been an interesting time, no doubt about it. Not only, of course, societal angst, but I can actually see it in the trading community. Even see it to a certain degree within the website and human behavior interactions and stuff. You can feel tensions are very high. Let's all just try and play from a position of strength. Let's try not to put ourselves into a position where we can't come back and play the game again tomorrow. And of course, if you're really lucky, you've already got your plan up and running and you were able to take advantage of some of the discounts there, through that panic dump there a few months ago, and you're banging out doubles now. Or some guys like Kavarkanator, Jesus, banging out how many? What's that laughing? He's got a fun little warrant that he's trading right now, and it's just gone absolutely ape poop. We've had some of the other kids in the TRI SOF club. It's embarrassing. Seeing some of their ideas just go absolutely insane. Congratulations to anybody who picked up on any of that UNOE, I think it was, Urban One. Man, that stock just went nuts. And interestingly enough, I'm finding there are other lithium plays that are rocking and rolling and just going absolutely ape poop, and I'm able to cash in on some of this. I've been banging out a lot of doubles recently, so I've got absolutely nothing to complain about from capital gains perspective. But I will tell you, I am getting pretty worried and pretty stressed about society and the direction that we're going here over the short term. This is we're only halfway through the year, and you can definitely feel that the temperature has been ratcheted up. As I've sort of said repeatedly, well, that's nice. Somebody, it looks like over on YouTube I have to approve some messages. So Kathleen wanted to let everybody know that she banged out a double on COVA. Well, that's good to hear, Kathleen. Sure hope you're working, that trading and that market activity within the context of a plan. I hope there were, multiple reasons for you justifying buying the idea ahead of time, and you can replicate that behavior in the future. And if that is the case, and your plan simply told you that, hey, this was maybe undervalued, ready to go, momentum, all those kind of fun things, and you banged out a double in a very responsible way, didn't take too much of a risk, didn't get greedy, always a good idea to leave a little bit on the books. You never know where the hell these things are going to go. That's how people get rich, trading the market, Kathleen. So if you can do that, then congratulations on doing that, and rinse and repeat. I will say I'm a little bit worried that, we have this funny anecdote floating around, Mr. Barstool trader at odds with people like Warren Buffett, and I'm seeing a whole bunch of old timers going, Jesus, can't end well. It's so cliche, in the 1920s, one market old timer, and it's a famous line, right? I think it was back in the 1920s, high tech was having elevators in your buildings, and they used to have people that actually had a serious job, a whole career, being elevator operators. It's fascinating. We don't even think about that these days. And one of the classic lines from the 1920s was a guy was like, I got into an elevator and the elevator operator told me to buy. And he said that was when I had to get out. I think there was also another rendition of it of a taxi cab driver. But anyway, that's here nor there. Point is that that should be just good anecdotal evidence anyway. That it's context of market state. And the weird part about it is that if you can actually build a financial plan where you're equally weighted amongst different assets, and if you have a sizable plan amongst different currencies and assets within different currency classes, what really ends up happening, and it's I think it's pretty cliche, and I try to teach students this, is where the hell is it? I think I have it in here. Maybe I don't. What does world capital do at any given point in time? And really, I think all it does is it just sloshes around the system. And the problem, of course, is that think of this as like altcoins in like 2017, right? When these things get to absolute insanity, of course, think BitConnect, right? Here comes BitConnect. Woo! We're all gonna get rich at buying altcoins, and then the damn thing sloshes back the other direction and drives everybody crazy. So as long as you can understand this is the way capitalism, the machine works, actually, I think that there's constantly opportunities. And you just have to sort of see the writing on the walls. I mean, we talked at length at TRI over the past year or two about things like yield curve inversions. Watch that at great length. Brian and his crazy 17.5-year fear and greed cycles. We talk lots about, years that end in 8s, 9s, 0s, 1s, and 2s. There should be a recession somewhere in there. So, it's kind of cool when site members and people in the public are like, yeah, Brian, you were saying all hell was going to break loose, and here it is breaking loose. That makes me feel better, but at the same time, too, I made a promise to the crypto community that when the market broke there in 2018 or whatever, I said I wasn't going anywhere, right? And now I've kept to my word. I mean, we keep running the program, and I think we keep making a positive difference in this space. And I think we produce educated market participants, and I think that's the most important thing that we do. And, through the up and the down and the slog and the slig and all that, we just keep doing what we do day in, day out. But I'll tell you, it hasn't been a hell of a lot of fun in crypto. But the irony of it all is I think that the sort of mess that you're seeing in the rest of society, believe it or not, I think it's actually setting the base, especially if you are a crypto enthusiast, for our future. What does the next growth cycle look like? And, to me, this almost feels like we're at the point where the previous crop has already been harvested. And what we're doing now is we're burning the land to sort of, put the nutrients back in the ground for the next crop and the next cycle. So that's very much what it feels like right now. These transition periods, years that end in 8s, 9s, 0s, 1s, and 2. The economist in the textbook, they'll just go, the recession there lasted 3 quarters and GDP shrank by 5.37% and the gross nominal product, blah, 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 blah. But you guys are actually, like, right now, right, feeling it. This is what these shitty years look like. And, going out and expecting to make monster capital gains in the market, that's actually, if you are fortunate and you do make gains, if anything, you need to really respect sort of what's going on around you and maybe even just, be humbled by those gains and, keep it relatively muted. It's not good to rub being successful in this kind of environment in other people's faces. It can be extremely dangerous. So, word of warning from a guy who's at this for 30 years. I've seen several of these cycles. If you can actually take advantage of the public's panic and, they're just giving away assets, I think there are some fantastic deals. Like I said, if we do happen to get that like $5,000 or sub $5,000 Bitcoin, love it. That's the kind of stuff that I'm talking about. But take advantage of those deals. Um, let's be mindful of the fact that this is a tough year, and the whole society itself is going through the transition of moving from the baby boomers into the millennials. It's a difficult transition, no doubt about it. Big part of this conversation here today, of course, is to address our current level 1 student body. And, I do appreciate that the class is fairly large. We have 2 TAs. They're working their butts off right now. We did as an experiment just think, well, maybe these people would like some extra sessions. And, we set up a somewhat, kind of ill-conceived plan looking back in hindsight. Some people interpreted it as TRI trying to mine our community for more revenue. That's the last thing in the world we want right now, people. Please understand that from me. Totally 100%. I'm not in this to make, grind anybody. So I do understand, and I can feel the tension in you, level 1ers. I can feel the anxiety. And, this is a really, really tough time. So, please don't interpret like we're the only ideas we were thinking were how can we add more services to you. So I myself through the week will try and make a concerted effort to be more involved in the level 1 group room, answering questions and stuff. And let's see if we can, just make everybody as least anxiety filled through this. And the irony of it all, I might argue, is this is 5 years from now when we're sort of mid-cycle into the next stream, and development projects are flying, and we're building our castles in the sky in Decentraland, having parties there on a regular basis. Remember, I don't know how these the DJs are back DJing, and we're living the frivolous life of mid-cycle sort of prosperity. This would be great journal information for you to have. I would highly recommend all of you to really journal, especially you level 1 students. The anxieties that you're feeling, the uncertainties, just everything about our life right now. And, I hate to say it, it's Brian, not really tinfoil hat, more like trying to understand that I'm just a part of this universe, and that there are far bigger things that affect us, funny little creatures running around on this third rock from the sun. And there is a really big, sort of almost like harmonic event happening in our solar system here through 2020. So I got to tell you guys, this is going to be information you'll literally tell your grandkids about. I'm also very worried too about how this thing has to end, but that's just Brian and this sort of conspiracy, tinfoil hats, all that kind of fun stuff. Monday to Friday, I think I do a pretty good job going through all these sort of broader market prognostications. We had really, really nasty fail on Friday into the close on a lot of assets, specifically stocks. You can see on the chart here, excuse me. And interestingly enough, even Bitcoin here in the futures markets, it didn't really finish the week very strong. You can definitely see sort of the heavy weight of the market. And algos were even like flashing uber bear signals. Be careful, be careful. And interestingly enough, gold finished heading into the weekend very, very strong. So, and also too, you can see the bonds were well bid. So, I guess the question I was asking myself is why would the market react so violently heading into the weekend and set itself up here for basically gold's gonna fucking gap higher here? Well, hell's gonna break loose. People are going to go panic into the bond. Stock market's going to crash, right? Why on earth were they thinking that? And then, actually sort of put the pieces together. It kind of made sense that we almost had like a perfect storm scenario there when Tulsa, Oklahoma there on Tuesday. And I kind of, like I finished teaching class yesterday. I think we had a pretty productive class. Really cool concepts, long option strategies. Um, and I didn't even really want to know. I just said it was like, oh boy, this is all setting up really bad. So I kind of tuned out of the market, took the rest of yesterday off, turned on the computer this morning and opened up all the sort of news feeds and stuff. And it was kind of like, phew, oh, thank goodness. Because things could have gone really ugly. And I have a funny feeling the market was actually setting up for something really nasty to happen there in Tulsa. So, thank heavens that was averted. I was kind of joking with Julian and stuff because Julian's super gold bug. And of course, on this kind of bullish action, what do you think Julian's doing? I mean, he's like long gold. I think he's dreaming gold bars right now. So, congrats. I get the feeling that because the shit didn't hit the fan, and I think I sort of said this on Friday's sort of daily video, that I wouldn't be surprised if the gold gaps higher here, but be careful if there really isn't any sort of catastrophe with protesters and all that kind of stuff out of that Tulsa event, then you might actually see everything just calm down here again. And, the coolest part about this was I actually think Bitcoin is sort of our real time. Like, keep in mind, all these guys, they're all closed out, right? They're not doing anything right now. But watching Bitcoin through the weekend, I think, was absolutely perfect because I think that it really, you could see that it was right on the precipice. And I'm wondering how I want to do today here. Maybe I'll just do a quick blurb on the corn. Looking at things like this is a daily chart of a breakdown of all my sort of momentum indicators I like to follow. That's probably not the best one to start from. Actually, this is probably good, just the triumvirate. You can see, moving averages are crossing bearish. And interestingly enough, moving average, I love thinking Litecoin as a leading indicator. Litecoin actually broke down those moving average relationships a while ago. Bitcoin's just now doing it. Usually we have a bit of a check on the moving average cross, so you can see it just about crossed here, checked, and went, no, get your ass back up there, right? And then now here we're doing that again. And it's interesting, Ethereum has yet to actually cross bearishly here there. But point here is you can kind of see very ME. And Ethereum very, very ME. Litecoin, its M actually has come in a while ago, and now we're still making. And then I don't know if this is even real or not. Crazy candle on stamp. Is that a harbinger? Certainly hope not. I remember one time that happened on BTCE, and the candle went all the way down to like 100 and I think it was about 110, 115. And everybody's like, no, that'll never, price will never go down there. And it was like $600-700. And sure enough, the market worked its way all the way down to fill in the tail. I sure hope that's not a harbinger. But anyway, we'll see what happens. If we go through the board, this is kind of what I'm thinking cycle-wise. It's fascinating how I really did expect into that sort of, I guess, where's July? July pivots coming in here. I really did expect a dump, but I guess this kind of cycle thinking would expect our next peak actually should be somewhere in here. So maybe it's a zing. I don't think that's really accurate. But anyway, I do like that kind of head and shoulders kind of thinking. That to me seems natural, but I guess from this perspective here, just looking at this, I don't know whether I'd really, if anything, this sure was an efficient pivot. Because there's all this kind of traffic area in here, there's this low and that low, I got a funny feeling this is going to be like really, really choppy. And actually it was interesting, earlier today, I think it was a day or two ago, I was putting out a tweet sort of to this effect, and I was like, gee whiz, holy nail biting. We're coming right into this apex here. If this thing was gonna dump, this is, and if this 2016 kind of replication scenario, I mean, to me, that it's there. It should happen if it's gonna happen. I don't know what the hell's gonna happen here. But gee whiz, oh man, I mean, it's just it's ridiculous how tight that is. So my knee jerk reaction is that but the problem here is, especially if I telegraph this, probably odds are that a lot of other people are thinking along the same lines, and the market never does what you want it to do. I mean, what I want it to do, and this is case in point, right? I mean, our last scenario, there was no big fuck you to go and run stops and then total break right back down and then just grind people's hearts into dust here. It was actually pretty polite, right? So, like I said, could we get another big fuck you candle here and then it dumped down into here? Sure, Mark can do any old damn thing it wants. But I'll tell you, I sure like the idea of a nice, especially if we could get if we could get a nice tail to come down and tag this, that would be such a kick-ass megaphone buy signal. Oh my God, that would be beautiful. Fingers, And the worst part about this, right, is if this is a megaphone, the longer this gets drawn out, wherever the hell that low is, right, the further this goes down. So if anything, you kind of want it to hit that and then go. So anyway, we'll see what happens there. I suppose this kind of market has just been driving the market predictor guys crazy here. Moon Boys, where are the Moon Boys? Do we hear too much about the crypto Moon Boys anymore? I don't know. Anyway, anyway I look at it, I think I've sort of said publicly, I've strapped on a few shorts on Bitcoin against these highs here. Because they're options, right? I like to buy put options. That's sort of what I like to do. I'm not really inclined to take them off because, most risk is the purchase price. And I do believe at some point there's going to be some sort of dump down here. The only question is, does it happen before September? That's the expiry on them. So that's a dilemma that I'm dealing with. As for actual outright trades, man, to have on like an open perp short kind of proxy all these perpetual swaps and stuff. Oh, those poor kids, right? I mean, this must be just unnerving. It's kind of ironic, because markets they say that markets range 70 to 80% of the time. We're only sort of laser beam focused during this part when the market's freaking out, right, on a short-term basis. Trend, man, right? But ironically enough, actually, this is normal. It's funny when I remind the gold bugs day after day after day that their gold market's basically been going nowhere for the past 3 months. They don't like to hear that. Anyway, I mean, what can you say? I mean, the cool part about this is I suppose we can actually start even thinking about trend continuation. This low here now is higher than this low. Do we put in another low here and do we actually start seeing W's come in? I mean, maybe. I really don't like the look of this. I would say, like your sort of indications that this thing is going to start trending higher in earnest. You really want to see a W on the other side of this trend line. What I'm kind of worried about here is, the sentiment right now is kind of meh. And like I said, everything, the whole stock market, gold, bonds, everything was pointed that the shit was going to hit the fan on Saturday. So now that the shit's not going to hit the fan, are we going to see like a whole collective, I look at this as a risk-on asset. So are we going to see a massive unwinding of all the bearish proxies and all the risk-on assets actually all catch a bid? It's not really like it's a new bull market. It's just, a big short covering event, which could take us right back up into this trend line. And, you guys have heard me say this before. I love candle bodies for trade locations. So I would love to be hunting a short right in there. I would love to be hunting a short right up in here. And the weird part about it, of course, you do things like reload zones. This isn't really the best chart to be doing this as off of, but what the hell. I'm a crazy guy. What do you think, Ben? Am I doing okay here? Interesting to see off of this range alone, 78.6. You've heard Brian squawk about that. Happens to just be those candle body levels, which just so happens to be the trend line. So, could this market pop up into this level? Sure. And, we talk about this guy Johnny Hoagland on the site. And you see that there's a nice little divot in the profile. Could we get a pop up top here to fill in that divot? Sure, anything could happen. So that's, it's definitely there. And like I said, 1 low, 2 lows, 3 lows. Well, if this thing can't make lower lows and it actually starts making higher highs, well, the bulls are going to start saying, hey, I love the fact that you're such an awesome technician, Beamish, but higher highs and higher lows defines a bull market. I'm a bull. See you later. I mean, I've seen it happen before. So, live by the sword, die by the sword. If anything, I think this is a fantastic analogy of, what kind of trader are you, trader or investor? The irony of it all is the traders are, actually the really good traders are actually well served just hunting trading range setups here over what's this? This is now, about a month and a half now, eh? And it was so cute. It was so awesome. Yesterday, I think it was. Yeah, yesterday. I woke up, and of course, I'm looking at this going, oh, bearish fractals, and Jesus, there's a big M. And we have one totally awesome day trader, and I don't know whether he calls himself a day trader or a swing trader, but he sure is working really, really hard to get good at this craft. And he's like, yep, actually, because for our trading community, and somebody out on Twitter was kind of like trying to infer direction of what I'm thinking when I threw my tweets. Don't do that. Because most of the tweets that I put out are things like banging out doubles or rhetoric about, politicians or, societal craziness. I don't put out new trading ideas on Twitter very often. I don't like doing that. It's not good. So don't look at my Twitter feed like, okay, well, I guess he's long here or he's short here. That's a dangerous idea, unless it's a pretty clear setup and I clearly articulate, I bought here or I sold there. Anyway, point of the matter is, in our lounge yesterday morning, there's a 5-minute chart for all you crazy lower time frame traders. This was the chart that I was putting out yesterday morning, and everybody, when I woke up, everybody was all commenting about this. But what I found fascinating about this is, and I don't know how many people are in this space really are quote unquote traders, but if you look at this chart, you go, oh, gee whiz, well, Mountain Man, obviously, it makes sense why the market dumped into this level and then reversed. Good old Mountain Man sitting there. And then you should also look at this and go, well, it was also, too, is the original double bottom. If I was an institutional player, in fact, actually, the level oneers just did this today, this whole idea of institutional fingerprint. So, on this side, the market's dumping. Well, we can clearly look back in hindsight and we can say, well, it looks like the market bottomed here. So, does the public put in bottoms in the market? No. I mean, just get used to it. We don't. So, what's the public thinking through this, right? The public is, the sky's falling, get me out, hit the sell button. And actually, it's really cool if you look into the counters tool on... what's the name of that website? I talk about it in the level 3 program with the kids. You can actually, there's a cool little tool, I think it's called Counters. And it actually shows you the retail public puking out, and that sort of market sell orders. Anybody know, what's the name of that website? I think it's like ftx.com or something like that. You guys know what I'm talking about? Does anybody know what I'm talking about? I don't know whether I'm allowed to show websites on here. I might get into trouble. I think it's one of these. Tensor charts. I think it's these guys. Yeah. So here, this is a really, really good analogy. This tool right here. Oh, what did I call it? Could I call it counters? I think I called it counters. Where this tool down here plots the market buy and market sell orders. So, it's kind of tragic, right? But it's a fantastic analogy of, because remember, institutional players, think Kavarkanator. Anybody know what's Kavarkanator's favorite fib level that he works his bid off of that we call the shark setup? Right? Anybody with me? I don't know. Maybe I'm just talking to myself. Yeah, well, no, that's the leper Kavark. But well, I guess maybe I'll leave Kevin to answer the question specifically. But he started out really liking the 78.6. But maybe he's adopted. Anyway, the point of the matter is that these guys, these sharks, right? They work their orders at levels. They work their orders. This is an image of market orders, market sell, market buy. Just get me out. Get me out. I don't care. Just get me out. So hopefully do you guys get do you understand it? Do you make the connection? So point here is, if we have market sell, like puking, look at this pukage right here. Who's buying that? Somebody's got to be buying that. And that's, if you can make that connection, that's the institutions. They buy the pukage by the public. And, nobody's saying that just because they bought here and the public puked out here that we go straight up. I mean, maybe they take some time, really wash them out. What's so cool is you can actually use this as a visual. Hopefully you can see the W. Can you see the W? They're puking. They're not puking as much. They're not puking as much. And then, hey, actually, we're starting to turn bullish. Hey, now the public's FOMO buying. And what do you think the institutions are doing into that FOMO buying? Does it make sense? Do you guys get it? Anyway, maybe you do. Maybe you don't. Benjamin, am I doing okay here? Am I going off on a crazy tangent? Half the time, I don't know if I'm saying shit that makes sense to you guys. Top shit. Oh, good. All right. That's good. Starting to. Uh-oh. Great job. Buying when they're crying. Yeah. So, I can't remember what we were talking about before this crazy adventure. I guess the point here is... it shouldn't surprise us that this big FU tail. And how about you guys over on YouTube? Can anybody tell you whose market is this? Did I not talk publicly to the public that this was a certain gentleman's type of market? Jeff says, we understood, Brian. You're doing great. Oh, that's awesome. Good. Yeah. And he's always smiling. Where is that guy? I mean, I hope you understand. I put and all you in the public. Yeah, I mean, you're gonna have to learn this, right? You want to play this crazy game called trading, and maybe after a while you look at all this and you go, I don't want to play this stupid game. These guys are idiots, and that's fine. But don't kid yourself. The cool part about being an investor is you don't have to play this crazy game. But, if you do decide to play the lower time frame leverage market kind of game, where's our buddy? Where are you? I know you're in here somewhere. Jeez, how long ago was that? Was that like months or years or decades? Anyway, jeez. Now I'm just wasting time. That's too bad. I thought I had it handy. Oh, there you go. You got to understand that this is who you're playing against. Yeah. I'm not gonna say that out loud, Anthony. So just be aware of that. If you want to play in this space, this is who you're dealing with, and people like this. Ironically enough, he's probably actually one of the nicer guys. Any of you guys over on YouTube, Anthony, do you remember who can finish this line? No TRI OGs or Gers are allowed to answer this. You liquidate me? How does the rest of that line go? And at least Arthur, he's gonna smile at you. You liquidate me, people. they're not even going to waste the oxygen in their blood system to force their muscles to actually even acknowledge your existence. Hey, very good, Rocker. Rocker got it. Aren't you technically an OGer? What level are you in? You sure got you sure got Johnny Hoagland's heart. I love that. That's awesome. I would love for you to go and just kick ass at Top Step and become best friends with Hoag. That would be awesome. There would be no better reward for Top Step than that. Go make them go make that Nebraska guy a whole boatload of money. Okay, we have to spend a lot of, well, not a lot, but a good portion of this session here on Sundays addressing some questions that were sort of overhanging, lingering, and we had some site members that were really, really gung-ho, and they like sort of jumped ahead of the gun, trying to learn the material. Keep in mind, we try and keep this as slow-paced as possible. It's a huge learning curve. If you have extra time, for heaven's sakes, go back and review some of the material that we've already covered, because I guarantee you, a lot of students, in fact, the one student who actually went on to become extremely wealthy, and I often make reference to him in these videos, he actually failed the level 1 exam the first time around, and he took the level 1 course a second time. So it just goes to show, and he even said the second time he took it, he was like, wow, I can't believe how much I sort of overlooked and I missed the first go through. So the point here is go slowly. Watch the pre-recorded lectures. I think there were 3 of them this week on Fibs. I also gave you guys the pocket tuts from the 10-minute retracement and extension tuts that I did for Coinigy a few years ago. And I thought you had a very thorough class with Grimm today. So, put all those together. If still, at the end of that, you still have questions, then fall on Brian here. And be sure, and Kavarkanator, as one of our level 1 TAs, has been sort of updating this, and just be sure to fire that extra question in, and we'll all address it here. So put it all together, I think you're getting pretty well served. So let's just keep on keeping on. I think this is a good course. There were 3 questions that came out of today's session, and 2 that are one that is very specific, and I think this is a misinterpretation of what I said through the class video, so that's good. It's important that we address clearly what's said in the class. One, kind of a review of everything that you can actually find on the site. So actually what I'm probably going to do here is just tell you how to find this stuff on the site. And then one here that's sort of just it's a fun question. Why to use one versus another? It's really more just a question of personal preference rather than anything else. Okay, so the one that is most important to me that really jumped out, it actually caught my attention when I was listening in class, was somebody watched the video, and when looking at this study of, and I think this is the S&P 500, they interpreted that I said that this was a W in price and therefore this was a good buy signal. And keep in mind that the Fibonacci tutorial here really shouldn't have said anything about whether these are buy or sell signals. This is more a conversation about levels. As well, too, the question sort of said, well, Brian says that this is a valid W. And so as a result, it's a good buy signal. I mean, let's just call a spade a spade. This is not, repeat, not a valid tradable W. So I'm not quite sure what the reference is in the video in particular to calling this a valid tradable W. That's just not the case. Not only from a clothesline basis, if we change this to a line chart, you'll see that this closing bar here is lower than this one. But also from a intra-bar basis, you can see this low is lower than this one. So this is not a W. And remember, our W conversation was 2 weeks ago? 2 weeks ago in the market structure. Remember, it's critical that if we're going to trade a W, i.e. thinking long, that the right-hand side of the W be higher than the left-hand side of the W. So we have to be absolutely crystal clear about that. What this video did reference, and this was more important, was how institutions use the 38.2. And what was really important here, and actually what I do like about this is actually very typical price action, in that we actually call this an FU move against these lows. But more importantly, this conversation was really more about how does the market actually resolve 38.2 levels. We would call this a dirty bottom. There's no doubt about that. In fact, this is sloppier than slop, and there's a huge price gap right in the middle of this range. So I can absolutely tell you without a shadow of a doubt, this would not be quote-unquote a buy signal. The conversation was more about use the 38.2 level to try and explain what's going on here. Because quite literally what's happened is the market's established a trading range, highs, highs. It's probed lower, so it's saying, hey, I'm still a bear. It's come back against these highs, and at the same time too, this is actually very normal price action on counter trend rallies. And we can't really decide whether this market is going to continue lower or is actually going to transition back into a ranging type market state where we do things like 61.8, 78.6, 88.6, all those kind of fun things. We can't even decide whether that's going to happen until 38.2 level is quote-unquote resolved. So that was actually the really important message out of this slide. Was this a tradable trade setup? No, not whatsoever. So I don't know who asked that question in the class. Thank you so much, Kevin, for copying and pasting it. Is the person who asked the question, are you here? Crickets. Chirp, 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 chirp. Rocker? That wasn't you. No, that was an old one. Yeah, Bob, no doubt about it. I mean, I actually have some students that they complete the level 3 and they go, okay, now just throw me right back into 1, please. Because once you complete all the levels, you can actually pretty much do attend all the classes and stuff indefinitely going forward. So there's a lot of people that do that, exactly that, Bob. The battle in first stop, right. Abdullah Hafid, was this you who asked this? No. Anyway, I really hope that helps clear up the question. Was this a trade setup? Absolutely not. Did I want you thinking that this is a valid W and you're going to buy here and you're going to trade this higher? Absolutely not. The purpose of this slide was to illustrate the very, very important battle, or what I call a resolution, of 38.2. And it does often, like if we had done a fib off of this low, that probably would have been a 38.2 tag of whatever that range was. Take your tool, made a new low, look for that 38.2, and that's where you pretty much are going to see some sort of fight on these dead cat bounces. And actually we see a lot of them. I was even talking about the corn here earlier today. And so, if we put on these fibs, you actually see it all over the place. I go, whoops. 38.2 here, so you can see market rallied off these lows. It kept pressing higher, and interestingly enough, too many lines on my chart. Head's gonna explode. We could use 38.2 the whole way up here. So like this rally peak here, you can see. Markets, I don't know whether you can see this or not, but markets zooming up. Woohoo! So as we're moving up here, you can simply use 38.2 as, well, at any given point in time, I could expect this market to check 38.2. So here you can see it came back down. You can use the tool just as, well, what naturally should happen here as we're moving our way up. And you can do it the whole way along here. Notice that. So, price is zooming up here, and you're kind of like, well, where should price maybe naturally just come back to as a check? Well, 38.2 helps you there. Okay, well, market zooming up a little higher. I should, at any given point in time, expect the market could come back to here. It only came back to here. All right, well, we're still very much a bull. All right, market moves up, and I move my fib tool up. At any given point in time, I could expect the market to come back down to here. Market comes down to this level, turns back up, etc. I just keep doing that over and over and over. And here you can see market, I'm still a bull. I'm still a bull. We still have not broken that 38.2. And actually what was so cool was in class today, we showed everybody the weekly price chart. The day that the Bitcoin bull died. I don't know whether you guys remember that. It was funny because I remember it because it was the day that Richard Hart cried on Twitter and YouTube, which I always find very amusing. But I don't know where I put the chart. I thought I had it. I have one. Yeah, I think it's this one that I did. Yeah, there it is. So here I just simply, just arbitrarily, I just happen to have a low here of $435. It doesn't really matter. I mean, if you want to be really specific, it should be, whatever that cycle low was. Probably not minus $18. I think it was like $150 or something, right? So you're like, okay, you take your tool here and you're like, okay, am I still a bull? Notice 38.2 was checked. We consolidated. We moved higher. All right, I'm still a bull. Notice this rally peak, right? Market's heading up, checks 38.2. Oh, I'm still a bull. And et cetera, et cetera, et cetera. Goes all the way up here. Notice market comes back, checks 38.2. You can see that check in itself actually creates our market structure, and that's what often happens, right? If we change this to a line chart, gee whiz, a big old M's coming in here. I think M's are bearish, and we'll lose 38.2. I don't know whether you can see that or not. The bull died right here. And like I said, this is January, February. I remember this specifically. And the thing is that traders know, right? It's not like it's some secret. So, traders just know levels. And it was so obvious. Richard got so upset, right? Because he knew exactly what they did. They brought it back to 38.2. If this was a bull, it would just continue along and bang. And I remember it was beautiful, and really not a lot of people even clued into it, why he was so upset. And he actually cried on social media, which was touching because it just showed that he was very emotionally invested in the story. But, half of our job is we just try and emotionalize our story, ourselves to the story. But it was interesting, like somebody in the level 1 class was like, well, do you remember through that period? Could you tell that it was over? And it was weird. Like within the sort of professional sort of side of the market, you could feel that it was over. And that, the worst part about it, of course, is this is when, a bazillion, gazillion people come to TRI. I want to learn how to trade. I bought my Bitcoin at 10,000, 11,000, 12,000, 13,000. Okay, now what do I do? And it's just like, oh boy, this is going to be a tough slog. So, if anything, really, really good anecdote of 38.2s there. And that's, for the person who's asking, what I really wanted you to see out of that, not only this Bitcoin example of how 38.2s are checked, and then the resolution of it tells you the direction of the market going forward. Am I still a bull? Rah, bull? Or am I actually transitioning out of a bull and into a trading range? And that often implies for lower time frames, keep in mind this is a weekly price chart, so that often implies for lower time frames, if we transition out of a bull and into a bear, that the lower time frame people, this is just going to be a total crap bear. And sure enough, that's basically what happened. So hopefully that helps. Okay, let's hit the next question. If that didn't help you, I need for you to reach out to me specifically, because that was really important what I just said there. This is not a valid W. Absolutely without that. I do not believe in the video I actually said this was a trade setup. I just said, this is an important conversation about 38.2s. Okay, this is a pretty easy one to answer. I see that when analyzing BTC, you use BTC US dollar perpetual swap contracts instead of BTC USD on exchange like Coinbase, BitMEX, etc. Why is that so? What's the difference of advantage? I don't know whether I have any one particular preference over another, other than I think that the purest price action on crypto is stamp. And I get, and this changes a lot. So I thought it was kind of funny that we were talking about DeFi, and a site member was showing me that there's some really cool DeFi projects that are just killing it right now. Thanks, Benjamin. And also he was asking how I'm feeling here earlier today. Such a sweetie. This Compound is just killing it. And he's interested in Maker and stuff like that. And so, I was kind of like, oh, does this mean I have to learn one of these 10-word phrases? And if I lose the phrase combination, then I lose my portfolio and stuff. And he's like, nah, Brian, that's kind of like grandpa talk, Turns out these DeFi platforms are really ramping up here. Anyway, Benjamin was showing us that things are really rocking and rolling in that space. In fact, actually, I think he has a nice chart deck that he's tracking here. These guys, big shout out to Benjamin. I mean, he's really doing some fantastic work. So that's Benjamin's universe right now. He's having a great old time. Good job, sir. Great job. Where was I going with all that? I can't even remember. Anyway, sure was a fun talk. So 38.2s. Oh yeah, question about why I use different markets. I used to do a lot of charting off of things like OKCoin, the casino, because I do to a certain degree like to use the derivatives markets as sort of an ultimate speculative proxy within the Bitcoin space. Actually, for the longest time, I really debated whether I wanted to continue using OKCoin, and actually I pulled the trigger and just moved the capital off of there. I think we have some tokens left on their token wallets, but nothing really of size there anymore. So I don't really like to use OKCoin, and I don't really want to even encourage people to consider the casino because it's pretty nasty. That's the you liquidate, and I don't think anybody even on YouTube even got the answer to that, eh? You liquidate me something something something. Only one person here in the lounge even knew the rest of that. Not a single person there wrote it on YouTube. Interesting. So the reference is, you liquidate me, I liquidate myself. Because there was a big fuck you move one day on OKCoin. And one gentleman got screwed out of, I think it was about $11 million position. And he basically went to the headquarters and said, look, you either fix this or I'm going to commit suicide. And he was like holding a little bottle of bleach, or, so the rumor goes. So, is it a good idea to play in these derivatives markets? Probably not for the novice. And I think I showed you pictures of Mr. Hayes. Right? You have to understand what you're getting involved with here. And as I said, if I was going to do the purest, simplest analysis of Bitcoin, I would think I would much rather use Stamp. And I do use Stamp in a lot of my charts. I do like to watch the MEX charts. I think Arthur, to a certain degree, keep in mind, and some people might argue that Binance forwards are going to overtake a market share from MEX, but for a very long period of time, BitMEX was the highest liquidity. So for that reason alone, I like to watch their levels. It doesn't mean it's easy trading there. It doesn't mean it's right. It doesn't mean there aren't going to be FU moves. But for those people that are trading crypto, I think it's important to follow these guys. I suppose you can make the argument that the Binance forwards is probably similar kind of conversation. So, do I have a preference one over the other? Like I said, if I was thinking about just looking at the spot market, and I think I do that on like this, yeah. I try to keep these just to the cash markets and sort of the cleanest, as they say, as Muhammad called Jesus, the cleanest of the prophets. I would say if there was the cleanest of the crypto markets, I would actually default to Stamp, believe it or not. I suppose Coinbase to a certain degree, Phoenix to a certain degree. The only reason why I have Ethereum on Phoenix on this chart is because I like the historical data. I suppose, there's just so many ways you can chart these things. And if anything, in a weird sort of way, I actually think that's a major shortfalling. Because it means that the price discovery process is all over the map. It opens up the opportunity for arbitrage. And you never really know where the real market is in this space. But, we have to get used to that. It is what it is. I suppose if there's sort of one collective decentralized network, if that even exists, to actually ultimately trade these cryptocurrencies, that would be the best. But my hunch is it's going to be very splotchy. And remember, like in the last crazy-ass bull market, we used to have something called the kimchi premium. Does anybody remember what the kimchi premium is? So it just goes to show the absolutely insane discrepancy from one exchange and one market to another. So half of the reason why I look at the MEX charts is, well, that's where a huge chunk of the players are. Anyway, hope that helps answer the question. And like I said, if I was going to pick a cash market to follow, I think I would default to Stamp. That would be my inclination. All right, and then the last question. Keep in mind, too, market I like to follow very closely is actually the CME futures. If I actually think a lot of the levels and stuff are actually established by the futures. And actually it was even interesting, we have this, very well-defined M up top here, and even some of our site members are kind of like, well, I hope they don't dump the market through the weekend so I can get some shorts off on this futures contract. And then also, too, one market that I really like to follow now, which ended absolutely on its knees, but interestingly enough, I think it's more a function of the Canadian dollar than Bitcoin itself. But I really like to follow this Bitcoin fund now. As you can see, it didn't end very well Friday. Is this a harbinger of the future? You tell me. But I like to follow this as well. So you probably see charts out of this once this thing actually starts getting some serious data to use. This, in my opinion, is much more trustworthy than the classic GBTC, which is basically an over-the-counter product and not highly manipulated. Here's a great example. Basically they took GBTC to new highs here. You can see this Bitcoin fund was nowhere near the old highs, the M and the price meltdown. What the hell were they doing over there on that GBTC? They were fucking over the retail public. That's what they were doing. What a surprise. Anyway. Okay. And actually, it was interesting. One guy that I kind of respect in this space, he was actually even publicly touting on Twitter that GBTC was breaking out to new highs, and I was like, tisk, sir. That's not good. Anyway, I doubt he'll watch this, but okay. There was one other question, I think, or maybe that was it. Talked about that. The bot. All right, so the bot, and it doesn't really matter what market you're looking at. I mean, I think I even did up a chart just for you guys. There we go. How do we say this? You level oneers, what I really want you learning this particular term is, I don't know whether this is the best chart to use. Well, I suppose we can try. Okay, so once upon a time, we get a big old rally up to $1,100-$1,200 Bitcoin. Woohoo! Big bull market. So this, remember we talked about 38.2s. Remember we looked at that. Actually, that was the $20,000 top. You could probably do the same kind of analysis. 38.2 is probably right there. But we're talking bot right now. So first and foremost, we identify a range. Woo, big rally. We want to see where the correction is too. And really the question we're asking ourselves here is this just nothing more than a pullback within a bull market? Or is this actually a testing of the bottom end of a new trading range kind of idea? So they're two very different beasts, right? If we're thinking this is a bull market, well, we're thinking, hey, higher highs and higher lows, that kind of talk. And trend continuation. If we're thinking trading range, then really your best to try and think about, trying to buy at the bottom end of the range, take some profits on a tag of sort of the middle of the range, right? Hopefully you can see sort of bottom half, top half. So they're very different creatures. And really that's the whole point of this level 1 education program, is we're trying to give you tools to be able to participate in a rip roaring bull market that just keeps roaring away. Or is this a trading range? We have to come back down against the bottom end of the range. You're going to look to take profits on a tag of the middle of the range. And the interesting thing about this is that within this massive bigger range, we could have, trend continuation setups that are actually like little bot setups, like here to here. And our bot, of course, is 33 to 66. So you can actually have like little trending signals within the context of a bigger trading range, right? Where you'd be expecting this as a trading range, something like that. Also, another really good example of that 38.2. Say we rallied up, kind of checked it, then had to come back down, and then, yep, we have resolved above it. So, but anyway, the point here is that in this particular case, the cutoff of whether this is actually still a bull or we're actually in a trading range is the bot setup levels. So, I like to throw on 66 or 33, minimum of 33, to set up that very natural sort of healthy stair step way higher. Sometimes if the market sets up underneath this 33, it's actually setting up a divergence, and you get something like that where your momentum indicators, kind of like here, if you had a push to new highs because the correction was less than 33, it's actually still trying to top out here. So I do like to see at least 33% to tell me that, okay, this sort of, remember 38.2s, that kind of talk, right? This sort of range now is being sort of established as sort of, okay, this is sort of, if we think of markets, you never really move in one line indefinitely. In fact, to get to an ultimate destination, quite often what markets will do is they'll move in a very stair-step fashion. So, I mean, that happens to be what this stair step looks like. But I want to see at least 33%, so we got that. This one's kind of interesting because you can see the initial stab was below 66. So even right at this point, I've got to be saying, you know what? This rip-roaring and I'm an insane bull, maybe that's done. So if that's the case, then really I have to change my thinking from bot trend continuation, right? Which would be ideally hoping for some sort of, say, consolidation there. Half of this move, good old 50% roll, that's WD Gann. WD Gann loves 50% rolls, and of course that is the most asymmetrical AB equals CD trend continuation. Right, if you think of how they build steps, right, it's very symmetrical. So ideally, of course, we would love, and on the site for our harmonics cheat sheet, where's that? The most ideal AB equals CD is this very harmonic setup, right? Boom, 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 boom. And then, in fact, like the absolute textbook harmonic would be basically like 61.8. That would the bot actually would prefer 50%, right? Perfectly symmetrical. It's interesting how the harmonic guys, they're willing to go all the way to 78.6. But if I saw a dip all the way to 78.6, I would be leery about really expecting to see whether that B was actually taken out. But, that's just trying to explain the bot here. So bot thinking is we go beyond 66, you better cool your jets. So in this case, it's range. And, the general rule I have, and it served me well, is that I can't really be a buyer of an asset unless I can, get good-looking reasons to justify me acting, unless I'm at or below reload zones. And what actually often happens, and it drives you crazy, is you'll see that the ultimate double bottom, which is basically here, it is 78.6 of that range. You'd be surprised how often that happens. It drives me crazy how often that happens. It's just, it's ridiculous how cliche that is. Holy Jesus. Who's that? Somebody took off. What a great example of a trade setup, though, eh? What is that? CLDX. Oh, yeah, that's a crazy damn pharma stock. You're only seeing that now, Sharky? Oh, man, we've been bitching about that all week. All right, anyway, so in this particular case, because we've gone beyond 66, I'm not thinking bot anymore. I'm thinking range. And as I said, quite often what you'll find is that the market will set up just the most beautiful setup right off that damn 78.6. You see that so often. And really, I might argue that the trade is probably something like buying that W, risking against the low, and what we suggest at TRI is use the 50% rule of this range now as sort of your profit objective. It works really, really well. It's conservative. You're not overshooting, and it's just really a question of, if I take that trade, is it worth my while? Oh, gee whiz, what a coincidence. It's almost exactly a 2-to-1 risk reward. Do you think that trade was manufactured? I hate to say it, folks. This to me looks like it was like pre-planned. And you can see, look how the market ran into that level and then falling. That's ridiculous. So, level oneers, this is what I want you thinking about range trades. Top of the range, bottom end of the range. Market went beyond 66, so we can't be thinking trend continuation anymore. Oh, gee whiz. W's, I can be a buyer at or below reload zones. And so really what I want you thinking is, okay, once and it happened pretty quick, right? Boom, right here. Once we're at this level, I can start looking at my indicators for signs of divergence. And there's really sharp traders. You can see cute little inside bars set up these rallies. You can see there was a little bit of a head fake rally here. Interesting. This is a really good commentary on clotheslines versus candle wicks and tails. Watch what happens when we change that to a line chart. All of a sudden that W really just doesn't look very solid anymore, eh? And then like right after this little head fake, boom, 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 in comes a quick M, and down we go. So I don't know whether we had signs of divergence here. Maybe this was a head fake and traders got washed out. I think you could definitely make the argument there was a hell of a lot of W reaction coming in down here. And really, this is beautiful, right? Look how the way the volume is sort of accelerating here. That's exactly what you want to see on a bull. In this case, you can actually see as we're ramping up here, bullish volume is actually decelerating here. Very bad sign. So, anyway, range market, right? 50% rule, all that kind of fun talk. Not a bad example. And actually the tutorial that I would like for you to watch in the library was off of a crude oil trade. And not only did I give you this screenshot and basically walked you through step by step 1, step 2, step 3, 4, 5, 6, 7, 8, all the 8. I also did up actually a video walkthrough of the bot. So it's about 25 minutes long, and it just basically is a verbal walkthrough of that tutorial. So the person who asked that question, I would expect you to have watched this video and even bookmark this. And the best way, honestly, the best way you're going to learn this is you just got to get in the trenches and start drawing. They happen everywhere, right? Really, just the question is, in this particular case, you can see here, high to low, right back to 66, right on the nose. Then we start painting higher highs and higher lows. I've drawn it off of this, but I suppose you could have actually gone right off of that level. This one's marginal, but nonetheless, it's still there. Where are we here? About trade. So this one, terrible setup. But nonetheless, it hit its objective. You can do it the whole way up here. The cool part about it is you can botch your, this is a weekly chart. Probably best if you're going to hunt these. Probably go off like dailies. Where are we here? Back through here. So all along here, in fact, actually I remember this one. You can start your analysis there. You could start it there. Just even if you looked at this range here and said, okay, well, I'm a bull. I want to get in. I want to get long. How the hell do I get long? So we'll do our little bot setup. 33, no more than 66. Okay, well that works. Then check that off of there. And go 25. Whoops, what am I doing here? There we are. And so in this particular case, trying to get long, you can see the inside bar reversal there. Big rally up, you can see the hammer low there. So there were a couple opportunities for you to get in. I suppose if we went down to like a lower time frame chart, you can see even better levels off of that. Mind you, I don't know whether we can go that far back. Probably not. Let's see, are we lucky? Oh, yay. Cool. Alright, yeah, check that out. So you can actually see of it just, all I did was I just quickly eyeballed this. You can see how off of this 4-hour chart, look at this beautiful battle right in here. You know? So, you know, if you're kind of like, okay, I want to get long, I want to get long. Do I see signs of divergence? I can see the bullish impetus diverging here. My hunch is probably if we did RSIs and stuff, there'd be a nice bull div here. How the hell do I get long? This is a really tough 2-bar pattern to take, but in essence, that is a massive reversal pattern there. And gee whiz, it's set up right off the damn bot level. In fact, I think this is probably the trade. I remember Sjord, we had a breakout. I think it was like right down here at like 600 or something like that. I remember, poor old Sjord. Might have been, you know what? I think it might even have been like, say here. And he's like, okay, I got my buy, I want to get in, whatever, blah 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 blah. And you know, like the market jumps up, and he's like, okay, I've got my orders working, and the market just never came back, and he just was left behind. And you're killing me. Anyway, so you can do these bots the whole way up here, right? And the whole way up, the whole way down. Ooh, look at this. Especially when I see this kind of action, I can visually see the W's coming in here. That's going to get my attention, right? I'm just going to be like, okay, obviously. And, you know, you can sort of eyeball this and go, okay, well, was that the correction? And that's actually a 75%. So maybe that's not the range. How about down to here? All right, and then I'll go, boom, there we go, 33, 66. Definitely plausible. So then I will clone that. And just eyeball it. And bot trade, and hello. 1 low, 2 lows, 3 lows. Let's even get a nice Wyckoff check right in here. Even another Wyckoff check in here. And there you go. Merry Christmas. So, you know, you can use this tool at any point. Just try and identify some sort of range. Ask if there's a consolidation. And then just you're projecting the range higher. I mean, was this like the top? Clearly not. But it's a handy tool that if you see a strongly trending market. See, if I had drawn off of this entire range, it wouldn't have come back to 33 for me. So I'd be like, kind of like, I don't know whether that's the range I want to use. Well, you know, that does work there. So, all right, so my objective and levels, and I mean, look how clean this was, right? Entry, move stop to scratch. Look how it came back and did not hit that entry level. So basically it said, nope, stay in the trade. Then move stop to, look at this. This is interesting. So move stop to trailing. It went zooming up here, pulled back. So clearly, you know, that's probably a pretty good place to put your stop to trailing. Moved up, pulled back, up, and then started move up again. And hey, gee whiz, now I can start moving my stops up. And then ding, 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 you're filled. So trader's life. And actually, I do kind of like how this set up nice and politely there. Right? Give you a pretty good looking entry window there. So. All right, so I don't know whether that helps. I mean, the cool part about it is you can see this stuff at any given point in time. You know, just even right now off of the corn chart, you know, clearly we have this M top. You could do a couple different studies. I mean, there is this. And we say, There we go. And let's flip that around. All right, so there's 33, there's 66. So technically that's valid. You could even go off of here. That actually did not hit 66. So both of those ranges are still valid to draw downside projections. If I went off of the bigger one, right, I would just simply clone that. Draw off of the most recent high, and then draw on my bot trade levels. Sometimes you'll find that they're backwards. And this is probably a simple message to all the level oneers. I don't want you thinking, okay, take your fib tool and draw right to left. What I want you to do is take your tool, look at the levels, and know whether this is drawn correctly or not. What I'm thinking here is that this is an A, B, C, D continuation pattern. So that means what I'm thinking is that this should be a pretty small port of that move. This should be a bigger port. This should be the entire part, 100% of that move. So I look at my numbers here and I go, well, no, these are smaller numbers down below and higher numbers up above, so it must be backwards. So in the pre-recorded lectures, I even told you to specifically write on your charts, what is this study trying to tell me? And then answer, this study is trying to tell me about short levels. Well, if that's the case, then I probably want to have like my entry somewhere in here and my profit objective down here. So that must mean maybe it should look like that. Haha. So you can clearly see now the market is very interested in this level. Hey, look at that. Once, twice, 3 times, 4 times. We getting ready for 5 here? Fascinating how when you do take the time to draw these levels out, it's remarkable how you actually see that the market sees these levels ahead of time. It's quite remarkable. It's important that you get these numbers correct here. So when you take your mouse over, you notice that says 95, 96, 31. And unfortunately, if you actually take your fib tool and you move it like that, well, then all the numbers change. So you can't do that. Remember, I cloned this study. I can't change that. It's got to stay the same. So it means, as it is on TradingView now, you have to manually scroll in here and manually put the level right on the level, or else it doesn't work. So it kind of sucks, but that's the way it is. So 95, 96, 31, 95, 96, 21. Oh, we're getting closer. And you can see, wow, we were a mile off. There we go. So hopefully that's on the right number. All right, then you hit your little circly button, and there you go. So, interestingly enough, we already have an M working. Also, too, this is a really good example for you all in level 1 of this idea of overlapping studies. What we really want to see is we want to see confluence. So if I, notice that this is a range, top of the range, bottom end of the range, what I'm probably going to want to do is draw my retracement levels. So, boom. And gee whiz, can you see how, first off, we have this pretty important horizontal support and resistance level. Those right there. Look left. That's kind of a funny business area in there. You notice also, too, this is a bit of a traffic area in the past there. We have our buddy, 38.2. Gee whiz, we seem to keep running into him today. And that ABCD takes us right down into that level. So can you see how we are starting to get confluence of levels? And that's really what you have to start getting good at, is you have to start seeing one study suggests that price takes you into an appropriate area on a higher time frame analysis basis. If you can get to that point, then you're really kicking ass. And remember, all of these tools, they're all about trade location. So they don't have anything to do with indicators. They don't have anything to do with price structure. They are purely location tools. That's kind of a, considering I just pulled that out of my ass right there, that's not so bad. What do you think? Rockers is like, hey, damn, that was a good lesson. I just literally pulled that out of my butt. It smells good, too. No, nothing? Not even one person acknowledges how wonderful that looks. It's almost poetry, really. Anyway, that's because you're all long and you're going, oh, fuck off. Right? Let's call a spade, right? It passes Bob Sniff Duff, so that's good. So, anyway, that's actually a pretty good lesson on how we can use one setup to and one trade level tool to validate another trade level tool. Also, too, really, what I want you thinking about this is this was a trading range, right? From and for the purposes of this study, we're going to use our trading range from here to here, and if we've lost this low, which we haven't yet, but if we do lose this low, then really what that's saying is the market is rejecting one level and it's thinking about moving into another level, right? Market structure. And, this could be debatable. We might even just do it off of this level. But for the purposes of this, we just did this. And it's interesting how these levels align. So if a market, and actually here's a really good example right here. You can clearly see that this was definitely some sort of trading range, right? Top of the range there, and bottom of the range here. And actually, you know what? For the purpose of this, why don't we just we'll do this one here. So you can see even better this is the top of a range and this is the bottom. Look at the war back and forth here, right? We go up against these highs, down against these lows, up, down, up, break. So clearly this was a range. So what's a kind of tool that we can use that, remember, all of these reload zones and all this is all about inside a range. So are there any tools that are available to us from Mr. Fibonacci that can help us understand levels if we move into new ranges? And that's where the extension tool comes in, right? And this is the second part of our module this week, is if we see a trading range, bang, 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 and we lose the range, well, ironically enough, the knee-jerk reaction actually is just simply to replicate this range below. So you notice what happens, and this is our extensions tool, that in essence, this is 0 to 1, so to 2 is just basically a replication of this range down below. So it really shouldn't surprise us that gee whiz market ran down into this area and said, well, you know what, I just replicated that range, I'm going to cool my jets for a while. And you can keep doing this. Check out this one. You can see the fight going on here. So you could say, well, that's a range. And sure enough, we lose the bottom end of the range and puke out down into this range. And here's a really good example where sometimes, the market can actually try to, you can actually see here, this is a really good example of the war that happened at the bottom end of this range. Where you can see on first blush, right, they lost this range and they came screaming down and just simply replicated that range down here and went, whoa, get your ass out of there. and actually opened up and actually went right back up and tagged the bottom end of that range again. Can you see that? So in essence, this whole range here was replicated like instantly, boom, boom, in this 2 candle right here. They basically just replicated the whole, I guess 3 candles, they replicated the whole range right there. Now the interesting thing here is we lost this range. What do you think the odds are that this is probably 300%? I bet you're probably pretty good. Let's see. We got 2, we got 4, there's 3. Let's see. Whoa. Oh, look how close that was. So the market was kind of like, okay, well, if you don't want this range, maybe you want another replication of that range. And you can see that just exactly like this, bang, bang, they went bang, bang. And then they sort of went, do we really want to be all the way down here? No, maybe we don't. No, we don't want to be. Yeah, I do. We do want to be down here. No, we don't. No, fuck you. And then, interesting, right back up. Look where we stopped, right back up at the top of the range. So this is a really cool example just here in the microcosm. And keep in mind, you can find this shit all over the market. But it's cool that I can just grab this stuff just out of the blue. But what I want you thinking about this, if you can, is this is nothing more than just a really big parking garage. All right, well, there's a level of the parking garage. There's a level of the parking garage. There's a level of the parking garage. And there's a level of the parking garage. See that? And ironically enough, in our level 3 program, we go into great detail on this. How do markets actually work? And what you find is actually there are key pivot reference points every market makes, where what ends up happening is you get holes and through floors and ceilings, and it's only when markets eat through floors and ceilings. Like here's a good example where the market clearly ate through a ceiling here. It jumped right up to the next ceiling. It punched its head through and then kind of went, do I really want to be up here? You know, its head sticking out through the ceiling, right? That's all you see if you were just like looking right across the ground. And it's sort of like looking back and forth going, do I really want to be up here? Right? And then it checks back and the hole in the floor has actually been filled in with buy orders. So there's no longer a hole in the floor there. Runs up into the next level of the ceiling, right? Nibbles away, you know, punches its head up against the ceilings, bunch of sell orders right all up in here. And ouch. Oh, wow, that hurt. Okay, it's not, that ceiling's pretty tough. So it actually had to back up to the most recent floor and reload and then take a run up through that ceiling and, okay, punched its way through. So I don't know whether you can see that. It's really good conversation about extensions and a fantastic example of the parking garage theory and how markets move from levels to levels to levels. Really, really good example. Actually, Peter will do this with you later on, and we'll look at the DOM and we'll see. You can visually see this landscape, right? This is what they call trading order flow and market depth. Anyway. Okay, so our original conversation was more along the lines, what I wanted you to see here was, because this is a failed range, and like I said, this is a tough one. I mean, do we draw the bottom of the range here? I think for the purposes of this, I might even just suggest that you draw the bottom of the range there. So if that's the case, and I remember when we drew this, we went, oh boy, there's your new trading range. So if this is the range, and we lose this range, where are we likely to go to? Right? And that's where we use extensions. So just based purely off of this particular range, does it make sense that if we just do nothing more than just replicate this, think parking garage, one level of the garage, another level of the garage, if we do nothing more than just replicate that, well, that takes us right down into Mr. Burchett's. 38.2 Fib, right? And then, oh, gee whiz, there's our bot profit objective, so we'll be happy with that. If we use the analogy that this is the trading range for our bot levels that we're using here, then actually this visually you see the bot level a little clearer in that really what the bot is it's nothing more than AB, CD, right into that level. And gee whiz, that just so happens to be a 1.618, which of course, and interestingly enough, like harmonically, the harmonic people love this when you have this important fib harmonic level and things like the golden ratio, that's what 1.618 is called. When they're this closely aligned, I mean, that's within, what, about $50 or something like that? And, this starts jumping out to all the mathematicians. So, and then to add insult to injury, I don't know whether I want to do this with you guys. This isn't part of the level 1 course. And it's really kind of a fun experiment that we've been using recently. But just try and understand chaos theory and price projections. But to add insult to injury, I might, for fun, try and find a fractal here and just see what that kind of projects to us here. So I think there's one like right here. Where are we? So we got like that, and where is that? Let's see, up, down, up, down. I'm kind of thinking this right here, right? Anyway, let's see what that gives us, especially that doji. Boobity boop, and boom. Let's see where that takes us. Alright, so Mr. Chaos off of that little fractal there wants 8,300. So interesting how, again, and this is a tough one because I don't know whether I'm really prepared to suggest that we're going to lose these lows. Interesting how bots and all this kind of stuff, what they're going to do is they're going to take us right down into these tails, eh? And if that's the case, maybe it's setting up something crazy like a honk and head and shoulders. And that's kind of more what I'm thinking right now. Anyway, we'll see what happens. All right, so really cool little tutorial there for everybody. I don't know whether you free YouTubers, any of you free YouTubers, did you get anything out of that? I hope so. It's a little past noon. I have to go and get pretty for the boy here today. I answered all the questions in here. Kevin, did I miss anything that I really should have talked about here? I don't really like to put you on the spot, but hey, I do. Don't think so. All right, so we're feeling good. Amazing BCS. Okay, well that's kind of cool. Vorn, cool name. I will rewatch this. All right, cool. And actually, I was really inspired. Yesterday's sort of my day off. I like to, I mean, geez, who in the public can you trust these days, right? I'm a big fan, but I even see it here in Canada. If you have government-sponsored news agencies, they can be extremely influenced, and they become stunningly politically correct, which ironically enough is a news filter unto itself. One news agency that I do have a great deal of respect for, though, in the United States, and even a higher regard than most Canadian media, is the Public Broadcasting Service, PBS, down in the States. And, of course, with all the, cutbacks in everything in our society. They've cut back quite dramatically as well, but the point that I would just say is if I was going to look for a news agency to try and give me somewhat unbiased opinion, I like the US PBS service. And one of their regular commentators is this gentleman David Brooks. He's a columnist for the New York Times. I mean, I suppose Mr. Trump's not going to like him just simply for that fact. But he and the other gentleman, was it Brooks and I can't remember what his cohort's name is. But anyway, I think they do a pretty good commentary. I mean, that's here nor there. Take it for what it's worth. But Mr. Brooks here did a nice speech in front of, I think it was one of his old colleges or something like this. And the first part of the speech, the reason why I'm mentioning it here, was, man, did it ever hit home. Remember, I'm a 50 now, right? So I'm on the other side of the fence for most of you. In that very lighthearted. He spends probably about the first 10 minutes making fun of himself. So if anything, I like people like that. Very very humble. But he talked a little bit about sort of where you are in your life, and he noticed that a lot of people, first, it's almost like they live a camel life, a camel with two humps. And the first hump is all about sort of your ego and getting yourself established and wife and family and being, growing up and our husband and family, whatever. All about self and material accumulation. And then the second part of life, and he said he's seen this repeatedly, is that a lot of people spend sort of the second part of their life really sort of, justifying their spirituality. And it really hit home with me, I have to say. Really, really hit home. I mean, I don't know whether I'm a nut, but I can definitely tell you, if you really want to learn a little bit more about me and my motivations, I only got through the first half hour of the speech, so it's probably at about minute 15, 20. Really described well where I am in my life cycle, which is probably very, very different than a lot of you. I don't know, it's food for thought. Obviously he's a little bit more left-leaning. So I'm not really interested in all the political commentary. It was just a really interesting little piece on how humans live their lives and the different stages that they live through. And if you really want to get to know a little bit more about Brian's motivations, then understand his sort of camel theory and where people are often in their lives. It really touched home with me. So with that said, I'm going to go out and get a couple hookers and an 8-ball and go have some fun this afternoon and be real me-centered. Not. I wonder if any of you are like, what did he just say? Oh, I'm a weirdo. So there you go, Benjamin. That's the kind of thing, dude. That's sort of like how we started the video today. I set you up nice and and then wham! Yeah, Bob prefers Jack and Coke. All right. All right, everybody. Have yourselves an awesome day. PMA for the win. Oh, by the way, all the fathers out there, happy Father's Day to you. I will be off spending the afternoon with the boy as best as we can given the current circumstances. Wish me luck. And other than that, guys, let's just keep on keeping on. PMA for the win. 1 + 1 = 3. And next week, I think, what do we jump into for the level 1ers? Are we into candlesticks? So we'll probably be talking empires, haramis, bear rammies, bull rammies, and all the like. All right, everybody, all the best, and bye for now.